Wow, better late than ever. A lot to talk about today. All right, so it's kind of it's not kind of it's a vacation week. It's Easter was Sunday, Passover was this past Friday, and Saturday were the two nights of the Seder. Passover, by the way, continues for Pesach all week, where we eat unleavened bread and a few other dietary restrictions. But basically, this is a vacation week. This is spring break, so it's like semi vacation. Some people are in, a lot of people are out. A lot of people are kind of working a little bit, bumming around. Certainly, that was a day like that for me. Just a lot of things to take care of, and it was a good time to do it. But anyway, markets up big today. Really solid day in light of so many problems around the world. Nothing's changed. Today's big move, it's just my opinion. It just screams one hit wonder. Problems from Ukraine to China. Look, I'm not one of these people who always says, "Oh, but we're not out of the woods yet." We're not out of the woods yet. It's the market could go lower. So be careful. We could have another blow up in China, or another thing in Russia. Middle East could blow up. I get that. There's always something to worry about. That is never going to go away. And if you're waiting for like the all clear signal to invest, if you're waiting for the all clear signal to invest, you're never going to invest, because there's always another problem, another boogeyman, another geopolitical event, inflation scare, whatever whatever it could be, around the corner. So let's dissect a little bit what happened today. And I want to go into the story of the night and the story for tomorrow, because this is a pretty decent earnings week. Next week is an even bigger earnings week. I think next Tuesday is earnings for Microsoft and Alphabet, which is Google. And Thursday, you've got was it Facebook? You've got a bunch of big other companies coming out with numbers, but all week next week is going to be Amazon and Apple next Thursday. Yeah, duh, Amazon. It's only Amazon and Apple. They're next Thursday. So we've got just a huge week coming. This was a big week for earnings. Next week is going to be even a bigger week. That'll be the peak of the earnings season. By the way, to all who celebrate, happy earnings season. That would have been good on a sign. I should make one of my cardboard signs, to all those who celebrate, happy earnings. They've already been gone before today, but it's just what a disaster that has become. The first time the company has seen actually loss of subscribers, not just like a slowdown in new additions or flat. They actually lost subscribers for the first time in 10 years. But we've got a couple things to talk about. Let's just put it all in perspective. Do you get excited and all build up about this rally? I hope you. Again, this is just my opinion. I have to always say that it's my opinion, because it is just opinion. We can't for sure know what the future brings. But if you got all built up and you went out and decided to chase stocks and buy this and buy that, all of a sudden you're feeling pretty good in deploying your cash. I could see tomorrow people having some buyer's remorse. Let's roll the intro, and we're gonna have a nice show. So here comes the intro. Here it comes. 3, 2, 1. Okay, we are back. Thank you very much for joining us. We're just getting started. It's be the boss of your money. When you see me in the live stream, that means taking control of your money. We talk about things like budgeting, spending with a purpose, getting rid of automatic, like autopilot spending. We talk about budgeting, personal finance, borrowing, loans, all kinds of things. And what we need to do today is talk to you about the market. While you're watching this, if you would be so kind, give us a reaction. Whether if you're watching, Facebook, or you're watching through Facebook or LinkedIn, hit us up with a thumbs up, a wow reaction, or a clapping reaction. The applause, the celebrate one in LinkedIn. If you're on Twitter, or give us a like or whatever. But especially if you're in LinkedIn. So let us know you're out there, because if you give it a like, I could see your name. I would love to see who's out there watching this. I always find out there are more people watching this than I thought after the show, which is pretty cool. I'd rather find out that there's more people watching than less people watching. Um, but I appreciate you guys out there. Listen, I throw it all out there. I wear my heart on my sleeve. I'm an open book. I tell you how I feel. All right. I mean, hopefully that's important to you. I'm going to tell you how I feel. You're going to get my brutal honesty, my opinion, and sometimes it might seem like it might seem like sometimes that I don't have filters. My filters are gone, and that's a good thing. I want to be unfiltered when I'm with you. When you spend your valuable time, your time is valuable, and I'm so flattered that you chose to spend some of it with me. So I don't want to give you the typical dribble drab stuff from Wall Street, which is always both sides of the fence, which is overly uh, polite, overly politically correct. Sometimes I do drop a couple of word bombs in there. I try not to, but it's just, maybe it's just a New Yorker in me. What can I tell you? I'm a pretty mellow guy, though, but I get pumped up for the show. Yeah, so let's take a look at the story of the day. Okay, let's hold on. Let me just fix my screen for a second. All right, that's better. So can you see that? Let me blow this up so you can see a little bit more, a little better. Netflix, look at that, down $87, but forget that, down 25%. Imagine, you wake up with you go to bed, your portfolio is $1 million, and you wake up the next day and it's worth 750. That is horrendous. This is I would say this is one of the biggest one night overnight drops in a large cap stock that I've ever seen in my career. And that's one reason why I think that today's big rally in the markets, just to show you where things are, the Dow is up about 500. Let's make this a little bigger. The Dow is up about 500. The Nasdaq was up over 2%, up 287. That's a huge move for the Nasdaq. We've seen a lot of down 2% moves in the Nasdaq too. S&P was up 70 points, up 1.6%. Oil comes down. Gold goes down a good amount. See gold down 34 bucks an ounce. The VIX down a little bit. Considering how much the major averages were up, you would think that the VIX would be down. That's this doodad over here. You would think this would be down a lot more. And that's usually a good sign. When the market goes up, this goes down. Okay. Um, let's just take a look at the Russell 2000 right here, up 2%. Okay. But, the NASDAQ has been losing 1 or 2% a day. So the fact that markets are up a lot today kind of puts us up to where we were maybe early last week. That's all it is. It doesn't really change the equation. And do me a favor while you're watching this, not only give me a thumbs up or a heart or a love sign, show me some social love. If you have any questions, hit me up in the comments. I love hearing from you. It's the best part of doing this. And words of wisdom, words of encouragement are always appreciated as well. Or just let me know, where you're watching from. I don't mean like where you're watching from, like in your living room or on your smartphone. Like, are you watching this while you're on the train on the way home? Are you watching this in what state are you in? Okay. I am in a psychotic state. No, no, not, I don't mean that. Like, are you in like, a different state? Okay. Eric is out there. Eric, use a sign to tell people on the street when you're going live. You'll get a lot more viewers. Your signs are the best. Dude, thank you so much for the suggestion. It's a really good idea, by the way. Thank you very much. It's a great idea. I should do it. I just, right? I mean, we all have great ideas, right? It's just, I wish we could have more time. Thank you very much. Eric is also a financial advisor. So when one of your peers uh, comes to you with something like that, and takes the time to comment, and a nice one at that, you know, that's very nice. That means a lot. Okay, thank you very much, Eric. Yeah, we should. I should definitely do that. And Kelly is out there. Kelly, what are you doing with all your time? It's not like you have free time all of a sudden because tax season is over. Because all those people you filed extensions for, now you've got to get their stuff in order. You've got business taxes coming up. You've got your family to catch up with. Wow, you know, right? It just never ends. But Kelly, since you're local to me and I'm local to you, we need to meet in person. Okay. Uh, Dr. Cannell is out there. Thank you, Phil. Keep it up. Yes, sir. Thank you very much. Thank you so much for watching and for your support, your love, and your brutal honesty, man. That's it's one of the things I love about you, man. Thank you. And it's all good. So what the hell were we talking about? Oh yeah, the market's up a lot. Yeah, look, we've seen so many head fakes, recoveries, bounces in the last couple of months. You know, the market started going down with a big down day the day after Thanksgiving, and it's never really changed. You know, that's when it was finally accepted that the Fed's going to raise rates. Um, Fed's going to taper its humongous balance sheet. So here we are, and we're getting ready for a 0.5% rate increase in about 2 weeks or so. $95 billion rolling off the Fed's balance sheet, so trimming it by almost 1.2 trillion per year. At least what we expect on an annualized basis. Those numbers are subject to change. So I don't think today undid the rolling over. This is the international sign language for rolling over of moving averages. I don't think today did anything to change the rolling over of the moving averages. It was a nice bounce. I think it was from oversold conditions. Could it continue a little bit more? It probably would have continued more. I think what stops it though is Netflix. Netflix being down 25%, and then pulling it's pulling down more stocks. So I'm going to see if I could show you some of the pandemic stocks or stocks that would be pulled down typically from this. I'm going to look at Roku, Disney. Let's just look at Roku and Disney, okay? Just enough, all right? So the news of Netflix is pulling down Roku down 7%. Now, Roku, its 52-week high is almost 500. It was over 500 at one time. Disney pulled down from 190 down $6, $7 down to 125. These are big hits if you look at from where these stocks have come from. And in some ways, the bubble burst for these kinds of stocks. But I was having a conversation with somebody before, and this fellow said something's got to give. Like no kidding. Like this person's a little bit late to the party, but Fed's raising rates. And they're committed to doing it. They're really going hardcore. Even their most dovish Fed governors are, beating the drum for higher rates, more restrictive policy. I think this Fed has gotten the message, and they don't want to be the Fed group that can't shoot straight, that let inflation get out of hand and destroy the economy. They don't want to be that group. They could still get credit for saving in large part the economy with their policies, but they've gone a little too far, and now nobody's happy. All right, so where do we begin from that? Fed's raising rates, war in Ukraine, Russia reconfiguring their forces around the most eastern portion of Ukraine, China still shutting down cities on fears of a wave of Omicron, and the inflation here, there, everywhere. Food inflation, food insecurity. I think could become a massive spark in a global tinderbox. I'm not exaggerating that. There are so many there are so many countries that are facing food insecurity. and that's what causes problems, revolutions, things like that. It just, I think there's a lot of central governments that are really worried and counting on the United States to send food. But it's going to be hard for the United States to send food with droughts in the West and Midwest, food prices here going up as it is, and the breadbasket of Europe, which was Ukraine, is basically offline now. I it's just we have a lot to worry about. So that's why I think today was a 1 day worry. Again, I'm not saying that we need to wait till we're out of the woods. We'll never be fully out of the woods, but I think some problems are more insurmountable than others, and I think that's where we are. So I'm looking at today as a one-hit wonder. I don't think the market could move up like it did today. Certainly, um, without when a Dow stock like Disney is down, $6 or $7, and Netflix, a big Nasdaq stock, is down 25%. It's just a killer move. All right, so let's go to bonds. Let's go to bonds. All right, so the 2 year yields are up again, and the yields have hit a cycle high. The 10-year went out at 294. That's the high yield of the day, by the way. The spread between the 2 year and the 2 year 2.6 and the 10-year narrowed a little bit, but nothing to change the fact that it's still a normal yield curve, a steep yield curve. But if you look at interest rates, I'm going back 1 year. Today hit 2.9%. There we go. Today, see that 2.9% on your screen? Interest rates on the 10-year closed at the high of the day, which means the 10-year closed at the low of the day. Pretty significant stuff, folks. We're super close to 3%. There was an article today about TLT, a ETF from BlackRock. I think it's BlackRock, but I spoke about this the other day. It's down 20% from its top, and it's just gotten absolutely obliterated. There's an article today about it, but I'll show you what I did. I put this up here. I put this up last week. Let me make this bigger. All right. You see this? This is the iShare. Yeah, the TLT, the iShare. See, it says TLT, TLT right over here. I put this up last week. All right. 52-week low in the Vanguard Short-Term Bond Fund, BSV, the Vanguard Total Bond Market ETF, BND, all 52-week lows that has continued. If you watch the show, you know that I talk about bonds a lot, and I've been saying we are in such a bad market for bonds, worst I've ever seen. It's over 30 years of the business. Clients have asked me, well, Mitch, I'm in cash. Why aren't I in something getting interest? They've asked me this a while ago, and for a while they've been asking, and now you know why. It's because of what I've always said, but now maybe it's really coming true. It's sinking in, if you will. That we're protecting your portfolio, your bond risk from your fixed income portion of your portfolio from duration risk. Higher interest rates would tamp down your portfolio. Got a couple of alerts. Here I am. Look at that. Live. It's like 20, 30 seconds behind. All right, that's what I look like. Okay. So we continue to be in this horrendous market for bonds. This is just such a swift downturn in yields. It's more or less the opposite of what we saw in yields at the front end of the pandemic in 2020, how yields went so low and now they're going so high. This is not just because the economy is positive, it has positive momentum. The economy is expected to slow down, maybe even tip into a recession. I think that's the big that's the big debate. Do we slow down and have a soft landing, or do we slow down into a recession? That's the debate. The debate could change to, are we in a shallow recession or a deep recession? If we get into that debate, that's a whole other set of problems, set of obstacles for the market. So that's basically it. Yields cycle high for this cycle so far. They're 2.94% on the 10-year, not far from 3%. Some people feel that Some strategists feel that 3% will attract buyers into the treasury market, 3% of the 10-year yield, to start earning some income. And some people feel that bond investors will start losing so much money that they're going to want to get out of bonds even more. It's really tough to say, and everything has been tough to say. It's like, are we going higher? Are we going lower? Is this a head fake? Is this not a head fake? I do think today was a head fake. I don't mean to be bearish or negative. I don't think today can overcome the earnings report from Netflix. If it does, I'll be here tomorrow telling you, guess what? Market went up. I'll be the first to tell you I was wrong. Just my sense is this is not a market today to chase. Now, if you're a long-term investor and you're putting away money for 10, 15, 20 years, it's not going to make a difference.